take us through what investors have been doing this week. What a week it's been. Gemma Dale joining us from nabtrade. Gemma, very good to talk to you again. It has been a bit of a wild ride, hasn't it? Because we've had that Fed speak, about the taper may perhaps been accelerated. Omicron has been the big news this week, of course. How have investors reacted?
So they had really strong leads into this week, which is interesting. So they had the sort of half day of trade in the US on Friday for the Thanksgiving holiday. Market got smashed. Our guys had plenty of time to digest that and think about what it might mean for Monday morning. And what it meant was they had a bunch of cash sitting on the sidelines and were just ready and waiting, hoping for an absolute bloodbath where they could buy everything they wanted. So there was clearly this extraordinary desire to buy. We've had a lot of cash sitting on the sidelines for quite a while, and volumes have been relatively subdued unless something gets beaten up really hard. CBA was off 8% in a day, they bought that. Westpac was down, they bought that a few weeks ago. But unless something gets beaten up really hard, or it's Fortescue, they're not super interested at the moment. The volumes are just not there. Monday that changed dramatically. People were waiting for this day for everything to fall apart and they were going to be all over it. They were all over it for the first couple of hours of trade, and as you know, it came back and the market only closed down 0.5%. So they got their little window, they took it. There's still quite a bit going on. Volumes are much higher now than they were a couple of weeks ago, for example, but they're not getting the bloodbath they're hoping for. They're not getting things getting really, really hurt, and that's when they like to jump in.
That's interesting. So what you feel overall, investors on your platform are of the view that it is all a little overcooked, due for a significant pullback, and they thought this may be the moment. But of course, we're in a bit of a holding pattern, aren't we, until we actually have some definitive answers on Omicron.
Yeah, the data's not there yet, and we know that, and so it makes it very difficult for people. You're always working in an environment where you have insufficient data to make perfect decisions, otherwise it wouldn't be trading, would it? But it does make it difficult for investors. They've clearly been waiting for something. We've been seeing our cash book rise and rise and rise, and that's partly because we've had an absolute flood of new investors and they bring cash in waiting for an opportunity to buy. But the average cash balances have been growing and growing and growing, and the last time we saw them at these levels was just prior to the COVID crash in February last year, and then they threw money at the market and bought like crazy. And now they're clearly just waiting for the next big thing to give them another window to buy at 30% down. They might be disappointed, but they'll take 8%, that's fine.
Yeah, well, why not? Okay, Gemma, I'm not even going to ask you if Fortescue is at the top of the list as far as the most traded. That's an assumption. It's a given.
Yeah.
What's it been vying with?
Westpac is the next big thing, or the new big thing, which is hilarious. Obviously everyone knows about Westpac, it's been around for a while, but it has become just an extraordinary opportunity for people. People clearly, so many investors and very high value investors are seeing an opportunity there. They were also buying it in January. So it's the second time I've said this year, and I find it really interesting. Back in January, the other three of the big four had rallied really hard and Westpac had lagged. And there was a perception among our very high value investors and traders that there would be some reversion to the mean and Westpac would catch up. Now, clearly that did not play out, or it played out for a while. Then they gave their annual results and no one liked them very much at all. They were down 8% on the day. They were down 10% over the week. They're just hovering around that $20 mark. And so many of our investors are going to, you know what, the premium that people pay for CBA is clearly going to fall. We are seeing a drift away from CBA, which is interesting. They bought it on a bit of weakness, but it's still dramatically up over the year, whereas Westpac's pretty much traded sideways over 12 months. Obviously with some volatility in there. So they're buying Westpac. It was a 90% buy yesterday. So it's still a really, really strong buy, and it has been for a couple of weeks now, and they're just pulling it in. They're not trading it, they're just buying, and they see it as something that's got to come back to the others, that it's not facing significantly different challenges, that all the banks are in the same situation, and they think there'll be some reversion.
All right, let's stick in financials. AMP. Can't take a trick at the moment, isn't it?
Yeah.
Its share price down again significantly over the week.
Look, I always talk about our investors being contrarian, and every now and then you get an example that presents itself beautifully, and AMP presented itself this week. So AMP is no longer a particularly widely held stock. When I put up our top 10 stocks 5 years ago, AMP would have been in there. It no longer is. Partly that is the drop in value quite dramatically over 5 years, but also most people have divested it by now if they don't want to participate. At $1.07 earlier this week, strategy update, people really liked it. $1.07, we saw incredibly heavy selling. 94 cents yesterday, we saw really heavy buying. So our guys are willing to trade it at the margin. For those who are still interested in AMP, they will do that. But it's worth noting for a lot of people, it was a yield trap a few years ago. Now the yield is really low as well. So for people who are picking it up now, clearly they think it can't fall much further. Although, as you pointed out, yes, it can.
Well, yeah, never say never. Now, Gemma, we briefly touched on Fortescue. We know what's going on with that. What about the other two big iron ore miners, Rio and BHP? What's been happening on that front?
So BHP's had a little rally. It's a little bit stronger at the moment, and so we're seeing some trimming in that. A lot of our investors have been buying it really aggressively, fairly recently at these sort of mid $30 range, and they're really liking it at that price. When it comes up a little bit, they're trimming it. And Rio, they're finding quite interesting at this stage. It's being traded. It's the value of those trades that's fascinating. So the average trade size at the moment is about $95,000. When you look at a retail trading base, that's enormous. That's 3 or 4 times the size of the average trade size in the banks, for example. So very high value traders moving that. That's the kind of average trade size that we see in Fortescue. So I wonder if there'll be a little rotation.
Let's see.
Gotta do
I'm not going to
something.
hold my breath, but we'll see. All right, let's switch to buy now, pay later. Of course, the two biggies in Australia being Zip and Afterpay, they've been under significant pressure of late, and some key levels there, particularly with Afterpay.
Yeah, this is really interesting. Afterpay completely dropped out of our numbers once the major announcement was made with Square, now Block. So people sold it, just sold it. They didn't want to hold it. They don't want to take a depository receipt in Australia. They're just like, you know what, I'm really happy to have taken my gains. I think also a lot of our guys, they watched it run up to $160. Didn't sell at that point. At 120, they're like, do you know what, I've done really well. Average value when they were buying last year was around $40,000. They were buying it at $40 last year.
Yeah,
so
wow.
when you're selling it at 120, you've done really well. They're happy to take that profit and go. So there's not that many holders left. What was really interesting, at $100, we saw buying yesterday. It's the first time it's popped back in the numbers for a while. $100, they're like, do you know what, I saw it at 120, 130. That was perhaps where that deal's going to go through. Maybe I'll pick it up again. So we saw some buying. Zip also fell way out of our numbers. It was a trading stock earlier this year, you may remember. So a lot of people were trying to take short-term profits on it fairly frequently. They lost interest after a while because it's been under so much pressure. But at sort of $4.50 something, they think it looks quite attractive and they're happy to have a go again. So it's coming back in.
All right, okay, let's move offshore. And when I say that, obviously focusing on the States. Tech stocks, of course, they have been under pressure given their growth stocks as far as what's going on with inflation, of course, is concerned as well. Apple and Nvidia, what's going on there?
Yeah, so Apple was our most held and most bought international stock for the first few years. Got overtaken by Tesla, as you know, but Apple was the big one and was held by an enormous number of investors. They just wanted a piece of it. We've seen really heavy selling in the last couple of days, 95% plus selling, which is amazing. Very unusual to see in international markets. And also selling in Nvidia, which is sort of a top 10 trade internationally, trimming both of those. There's been a lot of publicity about how strongly those top sort of 5 to 10 stocks in the NASDAQ and the S&P 500 have been holding up everything else. Everything else that's been under a heap of weakness, including Square, when you look at the index, you don't see that weakness in the tail. And when I say tail, I mean anything outside the top 10. You don't see that weakness. The overall number looks great, right? Up 24% for the year. You've done really well. But they're trimming the ones at the top that have done extremely well. Apple's up 35% this year. So they're trimming that. Enphase Energy is back end. So this is so interesting to me. Stock a lot of our guys would not have heard of. The value is enormous, hundreds of thousands of dollars in average trade size.
How do you explain that?
It's clearly a stock that a couple of people know and love.
Right.
It's also been on a run, so they've done extremely well out of it. But if it pulls back, they're buying it again. So oddly enough, it's a trading stock, but a very high value trading stock for a small number of people.
Gemma, terrific as always to get the latest and the trends on nabtrade. Thanks very much.
Great to speak to you.